So we are live now, guys. Sorry I had a 3-minute delay. We are coming to you live and unscripted from New York City. It's good to be with you guys on a Friday evening. Stock market moves that I end up making during the week. I did make a few this week. Jake's on here. Hey, how's it going? Awesome. I'm preparing for a big move. So everything's pretty busy right now, but I tell you what, I actually had the day off today. I actually made quite a bit of content today, new videos for YouTube. I'm going to be having some really good content. I did a 3-part series on compounding interest. That will be very helpful for all the new investors. What were your moves? So I was talking about 2 different moves. I'm actually moving my life to Virginia. And the stocks that I bought this week, I actually put a small position on 3M. It's good to see you guys. I'm going to give it a couple minutes to let you guys make your way into the group. Yeah, I bought some 3M. I bought into Pepsi. I had a reduced number of shares in Pepsi, and it had just gone down way too much below 100. I added up. I beefed up on my position in Pepsi. I beefed up on my position in Procter & Gamble. Procter & Gamble had gone down way too low into the low 70s. So I actually added a small position there in Procter & Gamble. I was looking at Home Depot, but unfortunately, Home Depot took a really big jump today. I kind of missed it a little bit. I was really looking at it in the mid 180s this week. I wish I could have picked up a position in Home Depot, but that's okay. I didn't. I let that one go. Right on. Niela's on here. How are you? Excellent. Good to have you. It's great to have you guys. Really, this is more of an informal type of a script from the Independent Investor channel. I made a lot of content this morning, actually, and my voice is probably close to gone from this morning. I think I made quite a few videos just this morning when I was home. So, but this is kind of your guys' opportunity. Good evening, Doug. Nice to see you. Michael Babcock is on here. Nice to see you guys. Greenhorn Grill and Smoker. I'd love to know if that sounds like a restaurant, man. Either that or that's just a killer screen name, man. I love it. Faceless HD. Made sure to be here when you start. Yeah, no big deal. You know, that's why I throw them up there. If you guys find value in this, I enjoy it. But I really like having the opportunity to engage with you guys. Sometimes I get a lot of email traffic now. Hey, Tim, what's going on in 1979? Yep. Everything's good. Everything's good. I've got Julio in the house. I enjoy these Q&As. That type of feedback kind of means a lot to me. I don't want to bore you guys at all. You guys obviously know my upload schedule is not consistent. I don't upload videos every day. I can't do that. I can't. I don't know how Scribner does it, man. And all the power to him. He's got a lot more tailwind behind him, too. He's got a lot of motivation going on right now. For you guys that don't know, Ryan Scribner is about to turn over 200,000 subscribers. And I got turned on to his channel when he was at 6,000 subscribers. So if you guys are not subscribers to Ryan Scribner's channel, kick over there, subscribe, drop a comment. That kid, he's got the sky's the limit for him. So I just thought I would shout out for him. I got to meet him one time. He came down to New York City. And I met up with him in Times Square, had a dinner at the Hard Rock Cafe. Couldn't ask to meet a better person, no doubt about it. I'd do anything for that guy. And I hope I get to see him one more time before I leave and get out of here and head down to Virginia. But the sky's the limit for him. He's got a really good head on his shoulder. And I really do. His new video on his new apartment is actually kind of cool. Should go check it out. I've checked it out tonight. She watched it. That was kind of cool. She had some ideas for him for interior designer. And he bought the same desk as me as well, too. So I gave him a little bit of guff on his channel, but that's all right. But pretty cool dude anyway. So yeah, it's kind of cool to see good people get ahead. It really is. I'm all about it. So yeah. I don't, hey, yeah, he was kind of showing it off, but I like that, man. I like to see good people get ahead. I really do. And I'm just proud to heck as the guy. I don't think he'll let it get to his head. I really think he's got a really good head on his shoulders. As a matter of fact, if he ends up being, extremely successful, which I believe that he will in YouTube, I actually think he'll probably go on to do even bigger and better things in life. And he'll end up helping a lot of people, no doubt about it. So we'll see. He's very young. If I had that type of motivation and discipline, he's very young. Just kind of a pretty cool example of what's possible, and a pretty good ambassador of what you can do with your time, as a young person nowadays, with all the opportunity that's out there in the world. And I'm all about it. I'd support that kid no matter what he did. I definitely have his back, no doubt about it. The rule of 72. Yeah, you know what? It's kind of funny. I tell you what, that was a rude awakening for me as far as scrutiny and trolling. You guys have to understand, man. I wasn't on social media up till about a year and a half ago, and I got my first Apple phone just under 2 years ago. So I was not on social media at all. And when I started the YouTube channel, he hit me up and asked me to do that collaboration. I was nervous, man. I was really nervous for that one. And I took a lot of crap for copying the financial education channel. I'm a lot tougher now. I didn't know what trolling was. So I had a lot of people on there trying to get a rise out of me, so I was on there commenting, like, hey, what are you doing? But, it was a fairly relatively successful video. I would have liked for it to gone to 1 million views. He's got 3 or 4 videos, I think, that are well over 1 million views now. So I'm just really proud of him, just a good guy. So a little more polished than me on my delivery, which is fine. I won't change for anybody. No way. He's got to be a little bit more polished in his approach, and he's got really good equipment now that he's working with, now that he's running a bigger channel, and quite frankly, it's his livelihood. So yeah. But yeah, I'd like to make my way up there again. Right on. There's Brent from the Financial Investor, man. Awesome. Yeah, very cool. Yeah. So just to allow you guys to kind of get in here, we can kind of talk about, some of the things in the stock market this week. The stock market's actually been on fire. I've made up about a pretty good downturn that I had, February, no doubt about. So for you guys that had deployed some investment capital during 2008, you guys have really been on a wild ride, and hopefully, you stayed in there for the long run. I know I thought I saw Brent come through with a move that he had made. I don't remember the specific stock that he had made, but he had held out, or he had bought it during the downturn. So hopefully you guys had enough fortitude to make some positions. I did actually scale back a little bit. I sold just a touch of Facebook. It had run up so fast from the lows. I had actually bought it and then watched it go down during the trial. And right at the bottom, I bought 25 shares just on a quick trade. So I actually traded 25 shares and kept the remaining 50 shares. So just less than $8,000 in that position I'm retaining. So I took a little bit off the top. I do have some plans there. I'm looking at a few stocks right now that I'd like to take position on. Raytheon is one of them. Salesforce is the other one. Salesforce is going to take me breaking a few rules with regard to getting into such a high growth stock at such a high price to earnings multiple. Intrigued at their business. And there's a few more things that I want to research with Salesforce before I pull the trigger and decide what type of share or block of share is going to be appropriate for Salesforce. I'm thinking probably a 25 share block. But I'll certainly let you guys know what I do there. But I was excited to finally get 3M back in my portfolio again. I only bought 10 shares of 3M. What you guys can kind of earmark as far as, building capital right now, if you're just starting, I actually shot my how to invest $10,000 video this morning. So I don't mind premising that for you guys. You guys can stand by. You guys will get a sneak peek or whatever that means. I don't know. I'm actually more excited about the video that I released today with how to turn $1 into $75,000. And I don't consider that clickbait at all. I just consider it a very interesting lesson for somebody who gets a little bit different twist on how compounding interest works when you apply it to $1 over the course of, you know, an extended time period. It's really interesting to run those scenarios. What's even more interesting is where I break down and show, you know, what the same effect for those contributed dollars would be if you increased the expense in that account from 0.04, right, which is what we can achieve when we're with VTI or VOO, or I actually applied a 2%, right? Industry average is 1 to 3%. So I took 2% and just ran that scenario. It was amazing to see, you know, the effect on those dollars, man. So just an amateur barbecue. Texas, man. I was in Texas. I was in spring. Yeah, I've lived all over, man. No doubt. I've been all up and down the West Coast. I have been all the way as far north as the Bering Sea, Alaska, all the way down to, I've been as far south as Ensenada, Baja, Mexico. Yeah, man. I used to commercial fish with the guy that lived there. So he was like, mi casa, su casa, man. So I went down and stayed with his family. That was back in my more wild days when I just threw my bag over my back and just went for it, you know, which I tell you what, man, if you could learn that type of freedom earlier on in your life, man, I'm a free spirit, no doubt. Like, I can't wait to move again. That's what keeps me on the move and keeps me grounded, honestly. Someday I'll settle in, but I will always stay on the move for sure. I'm going to start to address some of these questions. The first one I've got here is Greenhorn. Ryan, VTI versus VOO as a startup ETF, then having VT World Stock as a secondary ETF. Any one of those three options. As a matter of fact, VYM, that's the dividend payer. I like the mid-cap ETF that they have, and I like the small-cap ETF. Talking about stock ETF that they have as well. So I didn't pull the listing up tonight for reference, but there's about 10 ETFs on there that can get you done. No doubt about it. The reason why I choose VTI and VOO is because of the expense ratio. If you kick it up to double it to 0.08 and you run the compounding effect, it makes a big difference over time. 40 years, the VOO is going to cost you around $7,000, right? So you double that, that's another $7,000 on top of that. It's going to cost you 14 grand over time. So those little decimal points can make a huge bit of difference. Those small basis points when you're making those decisions can make a big deal. And when you get on Vanguard website, I encourage you guys to look all the way to the column to the right and check their historical performance, right? It'll show you when the fund was incepted, and it'll show you the rate of return since the fund was originated, all right? And I'm not sure what VT is off the top of my head. I actually think it's quite healthy. Most of them are 7, 8, 9%. Some of the new funds actually are up over 10. I know VOO is around 14, 15%, but that's a little bit misleading because it's only been out since 2009, I think, for VOO, right? So any one of those will get you done, but I don't want to see you guys looking to buy every ETF out there in the world, okay? You really just need one. You really do. And if I was a young person and I was hearing this information, or if I was in my 30s or 40s and I was looking to get my money exposed to the stock market in the very best way, I would just go with the S&P 500 index. That's my favorite one, okay? The way my portfolio is broken down, and I might not have explained this before, is I own the S&P 500 in the TSP, which is the military's version of the retirement. So Jake's on here, he can relate to that, all right? So I don't need to own VOO in my account. Now, my wife doesn't have a 401k, nor does she have a retirement account. So I bought VOO in her retirement account to provide basically that diversified base in her account, right? So that's just the decision I made. And then I bought VTI in my account to provide a little bit of broad-based diversification in my individual retirement account. All right. So that's just what I did. But I don't know if you need to be hell bent on making sure that you have multiple ETFs in there. Those products are meant to buy, and one product will get you done. I'd love to see you with 20, 30, 40, 50, 100,000, someday 500 or upwards in that account. Those products are built to house that many assets. Okay. That they really are. They're meant to put multiple dollars into, dollar cost average them up, and in your retirement account, you can set those up for dividend reinvestment. So hope that answers your question. That's a good one. Thank you for starting it off. You get me warmed up here, man. Honestly, I'm almost lost my voice from today because I threw down on a lot of content this morning. So VTI versus VOO is a startup ETF. Okay. Yep. I'm trying to save for waste management. That was another position I took this week. I'm sorry. It actually slipped my mind. I apologize. I put $4,000 to work in waste management this week. I think that was 30 shares, I think. 40. I bought 40 shares of waste management this week, and I bought them long. I was tired of not owning waste management. So funny you mentioned that. I'm on K97's thread right now. So I can happily report to you that I own 40 shares of it. So ironic on your timing on your question. I forgot that in the beginning when I was talking to you guys about my stock moves. But that's what I did. I picked up 40 shares of that. Kind of waiting for Comcast to kind of find a bottom here. Didn't touch anything with Disney. I don't think I touched any other blue chips other than Pepsi, and adding a little bit to Procter & Gamble for long-term dividend growth. So James Pearson hit me up. What do you think about LB stock? Is that what you meant, or did you mean Facebook? So clarify for me, because I'm not sure what the ticker symbol. I have a lot of ticker symbols memorized, but I don't have them all memorized. So if you meant Facebook, just clarify for that, and I'll tell you what I think. I took a little bit off of Facebook this week, just so you guys know. I bought a 50 share position, and right after I bought the position, it went down into its downward spiral for the Cambridge Analytica scandal, and all the way through Zuckerberg going and testifying before the congressional hearing and all that jazz, right? But the stock has recovered nicely. But when it went down, I actually added more to the stock when the stock was at around $150. So I've actually separated 25 of those shares. I did that this week to free up a little bit and not be so heavily exposed to Facebook. I had about $13,500 or $14,000 in Facebook. So I took about $5,000 off the table, and I'll redeploy those funds. I've already started to redeploy. I used some of those funds and proceeds because I was up nicely. It had jumped 25% from the low, and I'm holding the remaining 50 shares long. So I've got Julio in here. God, you guys are hitting me up quick. I'm losing these questions. Ryan, do you think the new momentum ETFs, for example, Vanguard's VFMO, as a supplement to VOO to gain a higher return and enjoy the benefits of active trading? Honestly, I think you could probably just own VFMO. I'm a little more unfamiliar with VFMO as to what type of product it is, who's tinkering with that account to try to gain some sort of strategic edge, right? As long as they can create that alpha, if it's a managed account, and I'd like to know what the expense is in there. So I'm going to defer a little bit on that question, but I'm going to come back and I'm going to actually read this thread, and I'm going to kick my Facebook group on VFMO because I'm unfamiliar with that. Okay. But any of Vanguard's products are really, really good. I'd like to know what the expense is in that account if you're alluding to some active trading that might be going on in that. Is that a mutual fund, or is that an ETF that's actually managed? What exactly is that? Because it sounds intriguing. I'm very skeptical of putting people that are active managers, into your account when, the passive route is, it's a proven route. And I don't care if you guys really where you guys invest your money, as long as you can make sure that you're doing it in a safe safest, most diverse, and making sure that you're getting a healthy rate of return per year to get you done. Some years are going to be greater, other years are going to be less, but on average, we need to be achieving a 7-year average rate of return in those accounts, right? And in your self-directed account, you're not taking your money in any other fashion other than just putting it into the market and subjecting it to the market upturns and the market downturns, okay? That's a good question. I'm going to have to defer on that one, but I'm going to look back on it. That's really cool. What dedication, even on Mother's Day weekend, he's live. No, you have no idea my level of dedication. You guys want to know what I'm actually doing on Mother's Day? Yeah, I'm kind of in the doghouse. Yeah, I'll be doing a cruise ship exam here in New York City. Yeah, I'm that guy. I was out on the cruise ship last Sunday as well. I'm pretty devoted to my job. And I love it. So I get to serve my country every day, and I get to do a job that's really amazing, and it's a land-based job. So you have no idea about my dedication on Mother's Day. And this is Friday before Mother's Day. So yeah, this is devotion. We will try to keep it within an hour, since y'all are making me feel guilty for coming on here for Mother's Day weekend. VT is so really low. That's acceptable. You know, when we're talking about expense ratios that low, we're cutting teeth a little bit. But I just want to make sure, you know, I just helped a colleague a couple weeks ago. He was turned on to a mutual fund by USAA, and USAA, that mutual fund, was charging 1.67%. And I ran the compounding interest calculator for him and took into account that expense within that mutual fund, and he just about puked on me. It was sad. I was glad to deliver the information, but it was bad news to have to tell somebody, honestly. And I guarantee the mutual fund that was sold to him, that salesperson, and I do say salesperson because nobody gives that to somebody with their best interest in mind. Nobody. I guarantee they got a fat kickback on that. Fat. Therein lies one of the nerves as to why I came out with the Independent Investor channel. No doubt about it. So I mentioned a few weeks about a new airline company called Canada Jet, ticker JET, JETFM. Went from 73 to 90, made a little over $3,000. Nice work, man. Man, Doug, I tell you what, you got a hot hand. Nice job. You know, if you guys see there, I got Ernesto right above that. Hey, Ernesto, what's going on, man? Long time loyal subscriber, man. It's good to see some of you guys pop into the group. Again, this is a lot less scripted than my normal routine, right? So I get to actually just kind of talk to you and shoot the breeze a little bit. But Doug's post there about the airline, it kind of proves that you can make money in 1,000 different ways in the stock market. And I don't tend to give you guys advice to say, you know, you have to do it one way or you have to do it another. No way. I was like, if you're successful, I train people to acknowledge the power of money and the power of compounding interest, full well knowing that a lot of people are going to go on and be better than me. No doubt. There's a lot of cats out there that are a lot smarter than me, you know, in the stock market, and they can have very, very good instinct and they can make it great. But just, excuse me, you got to kind of keep it in context a little bit and make sure that you don't get overzealous thinking that you can consistently beat the market, because it's very difficult to do so. And, you know, in acknowledging that good trade, you know, $3,000 a pay dirt, I would ask you, where did that trade take place? So are you on the hook for any type of taxable implication on that $3,000? Because if you initiated that trade within your Roth IRA account, you know, you'd be exempt from any capital gains on that $3,000, even if you just held the stock for a few months or a few weeks or a few minutes. It wouldn't matter. So I'd like to kind of understand the context surrounding that trade. But hey, man, I'm all about it. I'm the first one to say good job. I'm all about good people getting ahead, because it is damn tough in this world to get ahead. It really is. It's hard. It's not easy. It's not. I don't come from, my road in life has not been easy whatsoever. I mean, you guys understand, I drop tidbits every now and then about what I used to do before I started my military career. But I was a commercial fisherman in Alaska. And if anybody wants to try themselves or to test themselves mentally and physically, go to Alaska and work on a fishing boat, and then come talk to me about, what hard work is, because I'll put that up against anything I've ever done in my life, no doubt. But that's pretty cool, man. That's really good. I love to hear stuff like that. It just validates for me that, where a lot of people will make money in the stock market, there's equally a number of people that will actually lose money in the stock market. And I want to try to stay close to the vest as far as information I give new investors, so they get excited about stock market investing. If you've invested in VOO over the last month or so, you've done nothing but watch VOO go up, right? And those are the types of validations, right? If you invested in VOO in the beginning of 2018, you would have seen the S&P 500 move down, and you would have questioned, why am I doing this? Why did I listen to Ryan? What is he talking about? The right thing to do in retrospect would have been to invest more, right, during that downturn. And you're going to be provided other opportunities in downturn. Right now, the market's kind of on an upswing a little bit. Is now the time you want to be entering into the stock market? Probably not, right? If it's time to buy, go ahead and make your buy. That's fine. But certainly be willing to take advantage of those dips when those opportunities present themselves. K9, great to hear you about waste management. Waste Connection is a good one as well. Yeah, I'll have to check into that one. Waste management was really the only one that I've got some information on that I was really satisfied with regard to waste management. And it's a stock that I wanted to own long-term for a long time. They've got such a wide moat. They're such a well-run company. And I'm glad to own it. I'm actually going to try to accumulate shares of waste management and have a pretty sizable position in it over the next, maybe 5 years. I'm going to try to accumulate some real good shares in it. So it's just funny you mentioned that. I forgot to mention that was one of the positions I took this week. That's cool. So, yeah, we're talking about, here we go. Oh my, I've got a lot of questions here, guys. Let me scan through this here for a second here. Okay, I've got Brent. He's talking about Facebook climbed really great after its leak scandal, but man, did it climb over the last 2 to 3 weeks. Yeah, it was amazing. I knew it would. I wish I could. In hindsight, I probably could have just stayed long the shares. But you guys saw in my portfolio review, I was about 23% exposed into technology. And I thought it was probably prudent just to take a little bit off the table, because I'm invested in Google and Amazon, which are another couple. Google, not so much, but Amazon is a little bit more higher risk of a company, in my opinion. It's a little bit more risky than I like to take on. But collectively, I thought I probably had a little bit more overexposure than what I wanted. So I took some off the table, and I'll redeploy that capital into some beat up names that I think are really kind of oversold right now. So subscribed 3 days ago and have been binge on a lot of your videos, and great videos they are. I'm wondering why I never seen you mention any bonds. Yeah, I've been hit with this question before. And quite honestly, I understand the old cliche talks about a certain percentage of bond portfolio allocation, and I get that. I'm 40 years old, okay? And I would like to assume there's a lot of people in my audience that are in their 50s and 60s. I don't know if I've got any 70-year-olds in my audience, but if there are, that's really the time, in my opinion, to hold a good amount of bond exposure in your portfolio later on in life. Quite frankly, it's not something I want to own in my portfolio. If I owned, let's say, 30% of my current portfolio, it would be $50,000 right now allocated to bonds. And I'm a young guy, okay? I'm 40 years old. And so if I were going to start to transition into some bonds, which I'm going to do at 50 years old, that's great. I'm going to actually do so through the Vanguard's product. It's BND, I believe. They actually have a bond ETF for both short-term and long-term bonds. And so if you're interested in playing, you know, the municipal bond market, certainly you can do that. But I really try to stray away from that. And a lot of what I've tried to do in my portfolio is put good, high-paying dividend stocks in my portfolio instead of going with a much safer route, which is bonds with a lot less of a payout. So the good blue chip stocks will provide me some capital appreciation and also pay me a good 3 to 4% dividend. And I've talked to a lot of people. I do own a pretty good position in the Blackstone group. Ticker symbol is BX. Right now, that dividend is actually at 10%, and it's a limited partnership. And I actually kind of hold that as kind of a buffer in my account to kind of take the place of what would be otherwise held in bonds. And that's just how I do it. If you guys want to own bonds in your 20s or 30s, that's totally fine. It's just not conducive to my risk tolerance right now. What I'd like to do is kind of transition from some of my growth or more riskier assets that I've got now into a partial bond allocation. But I got to tell you, I know me, and I could actually see myself being a stock investor the rest of my life. I will probably live on this earth as a stock investor, and I will probably die with those same holdings, honestly, because I don't care so much about, you know, investing in the stock for the money. I care about it for the legacy. That's why I do it, guys. And I'm prepared to take that all the way into retirement. I don't really care. But I will actually be looking to add some bond exposure later on in life. So that's a very good question. Thank you for going back and watching that old catalog of videos, man. There's some really good information on there. And a few of those videos have a few hundred views. And that's some of my best content. It's some of the stuff that I'm most proud of. I know how good it is. I don't care really what other people think. If you can go on there and get value out of it, Lee, then I'm all about it. Take the information, plagiarize it, use it for your own benefit. I'm all about it. As long as you get some positive benefit out of the information, that's what I consider you to be empowered, right? So I'm so glad to have you, man. I've been having a lot of new subscribers come to the channel. If you guys haven't noticed, the channel's been growing quite nicely, and I'm really happy. I'm happy about, you know, the fact that I've got, you know, over 3,500 subscribers now. I'm happy about that. I've got a core of a few hundred people, you know, that really enjoy the message, and that's really who I do the work for, no doubt about it. So I've got Nyla hitting me up. How do you go about deciding which stock to buy? Where do you research? And thanks. So I do all my research on my trading platform, all of it. I do like NASDAQ. I think it's NASDAQ.com, but NASDAQ provides some pretty good research tool. But I got to be honest with you, the majority of my research comes off of my Merrill Edge platform. And a lot of YouTube people will get on here. A lot of channel creators will get online and they'll talk about, you know, how stupid analysts are. I disagree with that. I may not go the way an analyst feels, or I may feel completely different than the way analysts feel, but I'm not dismissive on reading reports, especially Morningstar. I enjoy Morningstar reports. That'll give me some idea of where a company is at a certain time. But you need to also understand what type of investor I am. I'm not necessarily interested in stacking together accelerated revenue growth to try to hit the stock at a point where it's going to give me outpaced appreciation going forward. I'm not into big growth stocks, okay? Now, I do have a few growth names in my portfolio, but as a value investor, it's actually very, very simple for me to invest in the biggest, best companies out there. I'm looking for the best of breed in any one given sector. So I don't pay so much attention to scrutinizing balance sheets. I do look at them. I look at them for fun. I'm really interested to see how much company debt somebody has, so like I own 100 shares of AT&T right now, and they have a lot of debt on the books, but it's a company that I wanted to own, so I went ahead and bought the stock. But as a value investor, honestly, there was a few names out there when I started investing that were just obvious home runs, obvious. Johnson & Johnson, Procter & Gamble, JP Morgan Chase, which is the biggest bank in the world. We're talking about Disney, Apple, Verizon, Wells Fargo, and there's a bunch of other companies out there. 3M, the worst thing I did, I think I recommended 3M to you on a couple weeks ago when you were asking about a really good dividend payer. But 3M in the industrial sector is a fantastic name. And I'm into those names that I can invest in for the long term. I can set up for dividend reinvestment. I'm always looking for those dividends that have been historically paid to shareholders. How shareholder friendly is a stock, and you'll find that it's not as difficult as a lot of people think to pick stock. It really isn't. Sometimes the most obvious names, are the best investment to invest in. And I've been very, very successful in doing that. And I think a lot of people try to overthink the stock market, and they try to, beat it, right? They try to find that magic stock that no other analyst out there has found. And that's just impossible. There's thousands of analysts scouring over every single stock that's listed for public trade. So you kind of got to get over yourself a little bit if you think that you're just going to find that magic stock that's going to make you rich, unless you're Michael. No, it was Doug. Unless you're Doug. Doug's the one who can find that magic stock to make you $3,000 a trade, man. So I just don't invest that way. I don't. I'm a value investor, and I'm trying to accumulate shares in what I consider cornerstones in specific portfolios. And I sleep well at night, Nyla. That's just how I've invested, most of my life, and I've been very successful doing it. And it's really an easy way to invest. It really is. If there's a company out there that you like, that's a big company, and you can resonate with that company, it has to mean something to you, then by all means, invest in that company. And that it's a funny thing to say, because a lot of people think that they have to read a balance sheet. And quite frankly, I don't. I very rarely ever read a balance sheet to take into consideration what stock I buy. I don't need to. I think he means L brands. Yep. Okay, cool. Yep. Thank you, Michael. Yep. That's kind of what I was thinking. I wasn't sure if he was saying I put on a few pounds, but L brands is really good. But I tell you what, I have tried to do like women's apparel. I know Macy's just reported they got whacked. L brands and retail, anything that doesn't have a big A in front of it, and I do mean Amazon, stands the risk of being subject to the Amazon effect. And there's only a couple in retail that I feel are not subject to the Amazon, and that's Costco and Home Depot. But I like L Brands. I think it's a fantastic company. I think they have excellent brand loyalty, no doubt about it. That's all I'm going to say about that, because I've got some insight on brand loyalty, that's for sure. So, but I think, it's a great dividend payer. I think they pay about a 4% dividend. I think their stores are fantastic. I think a lot of people really go out of their way to buy that. I think they do have a very, very large moat in their product offering. And I think the pink line, everywhere I look, the pink line is resonating, especially with a lot of the younger consumers. I would buy L Brands. But here's the thing. I'm not going to buy an L Brands over, a lot of other companies that I would rather own other than L Brands. And I've been kind of smoked by retail in the past, so I'm a little bit hesitant. I actually think there's a few more than L Brands that I would rather buy. I like Estee Lauder. Estee Lauder is really good. One stock that I've been looking at very, very hard, it's not Sephora, but it's the other one. But some of those can really get it done for you. You can probably outpace the market if you were willing to go with any of those beauty products. That's where I'm kind of at with the cosmetic lines. It's not Estee Lauder. Estee Lauder is a very good one, but there's another one. that's really, really tempting right now. That can get it done. But it's just gone up into the stratosphere, and I watch it. I do monitor it. L Brands is up there, certainly, but I think you could get it done with L Brands. But I don't think I would put my entire portfolio in L Brands. You know, give it a certain allocation to your portfolio if you're interested in the company and call it a day. That's what I would do. So I believe it's a moneymaker. Yeah, I mean, it certainly could if you're talking about L Brands. What do you think about iMat Tech Live? I'm not sure what that is. Uncle Marv is hitting me up with iMat Live. I'm not really sure what that is. So just give me a clarification, man, and I'll readdress that. I expected Apple to pull back a little after the last 2-week jumps, but had nada, had ex-dividend today. I actually took a few shares off the table in Apple as well. And you guys need to understand, I had a very sizable position in Apple, wrote it down, bought more, kind of similar to Facebook actually, and just wanted to take a little bit of tech exposure off the table. I'm not sure if you guys understood that I did add a 65 share position in Intel. So I do own that within the Roth IRA, and I want to own those shares long term. So it was really just an attempt at diversifying more of my portfolio out. So L Brands is victorious. I know what it is. I get it. I'm with it. I know. Yep. Bath and Body Works. Yeah, that's another good one. That's not the one I was thinking of. It's not Sephora. It's the other one. And I'll think about it. It's the membership place. It's the cosmetic place. It's like a full service place where you can go in there, and it's amazing. The brand loyalty is very, very good, but I know they've got a very, very good membership program. So Alexander hits me up. Hey, Ryan, I got in on Apple at its recent low of 160 and Procter and Pepsi at their you got fantastic entry points on all three of those stocks. So congratulations. You got really good entry points. Should I dividend reinvest and just stick to VOO for the rest of 2018? Relatively new investor, but they were at the lows. The answer is yes. I mean, aren't you satisfied? I mean, Alexander Torres, man. I talk all the time about me waiting 7 years to buy my first stock, you know, and look at you pulling the trigger on 3 of my most favorite stocks. I'm long-term holders of all 3 of those. And I do own a sizable position in VOO, almost 100 shares. I've got 90 shares of VOO, but absolutely, man, ride this market out. See it. What you're doing there is you're exercising your right to hold. Okay. And this gives me kind of a good segue to kind of address Alexander's comment. Basically, it's not really a question. He's just asking whether or not, you know, you should kind of hold off a little bit, monitor the situation, maybe build some cash over here on this side of the house to be kind of a little bit more prepared, maybe for a hiccup in the market, maybe another downturn. But I think a very good fundamental lesson that new people fall victim to is they're so used to, up until they're 18, 20 years old, of just having a savings account. And that savings account is static, okay? Cash is static. It's liquid and static. And a lot of people get mentally conditioned to looking at that cash, and it's there. It doesn't change. We might get 12 cents of interest paid by the bank, but it doesn't move very often. When you transition from cash to shares of stock, okay, those shares of stock are no longer going to behave like cash. They are going to behave like shares of stock, all right? And you need to condition your mind to separate between those two actions. Don't expect your shares of stock to act like cash. And a lot of people fall victim to this. They'll put their cash over into shares of stock, and they'll start monitoring this way too close. That point, I really wanted to make that, but I would hold. That's a very good start. Earmark January of 2019 for new Roth IRA contributions, and I would start saving cash right now to maybe add maybe one more position to that portfolio, maybe 2, depending on how you feel, depending on what your age is. I know a lot of you guys have hit me with your age, but I can't remember everybody. But depending on what your age and risk tolerance is, you can ride that to the sunset. Really, those 3 assets right there, those 4 assets in that account, you could keep those long term and you could be just fine. You could probably outpace the market the rest of your life in a tax deferred and a wealth preserved account. So I'm all about that. That's really, really good. See, Brent's seconding. The financial investor, he does very, very good technical analysis, and he invests a lot like I do as well. And I give him kudos. He's one of the channels that I back on my channel, and I do anything to support him too. So thank you, Brent. I think you're good. I think you're good to hold there. I really do. So you're welcome. Yep, no problem. I watch list way too much. Not really. Watch lists are great if you're talking about the same thing. But, you know, do other things, man. Let those investments work for you. A lot of what you can do is kind of over scrutinize those accounts. And you know, sometimes it can tempt you to tinker. And just the best thing you can do, I always advocate for you guys as a community working really, really It can be the best thing you can do. And I understand it's kind of the hardest thing to do if you're just going to ignore your money, but you're done. You're a winner. Starbucks. I really like Starbucks a lot. I think from a growth perspective, I think they're really good. I think they're expensive. Okay. And I would premise you to be careful because Starbucks might be one of those examples of going from high growth to growth value. And when they go from growth to growth value, the stock suffers. And it wasn't this last earnings report that I was concerned about. It was the one before this one that was actually pretty poor. It was really poor. I didn't pay too much attention to this time. I know the stock didn't move very much. I know it's right here at this high 50s level, around 58, 59. If you wanted to take a small position in Starbucks as a beverage company, go ahead and do so. I think Pepsi is way more attractive right here as a value investor. But if you wanted to add more growth to your portfolio, go ahead and do this. But Starbucks is not the growth name that it was 10 years ago. All right. So just so you understand, you're taking a little bit of a risk on being on the backside of that growth wave, as opposed to riding on the front side of that wave. Okay. So just be kind of careful with Starbucks. I don't own it. Okay. Again, there's a few more stocks that I would probably rather buy than Starbucks. And I jumped all over Procter & Gamble. I wanted to buy Johnson & Johnson. Merck is another great buy right now with their cancer drugs. Pfizer, talk about Merck right here in the high 50s. You just can't get a better name. Lots of good value right now. Energy is a hot sector right now. If you fancy owning some energy, certainly good stuff going on right now. I hate to toot my own horn about Marathon Oil, but that was a good trade recommendation that I made to you guys. If you guys have invested in Marathon Oil since I recommended it, I've since sold out of the stock. I sold out of it in the 16s, I believe. Another mistake, selling too early. But I was pretty exposed to energy and I wanted to pair some and take some profit. But there's some really, really exciting stuff going on right now in the energy sector. So lots of stuff to look at and monitor. On one of your earlier videos, you mentioned that an ETF gives back cash, say quarterly, by applying the function of dividend reimbursement on your Roth IRA. Will that begin that process of compounding interest? That is an awesome question. And I think at the time I made that video, I was a little bit under a misconception about ETFs. And the many research articles that I've read on ETFs compared to index funds basically said that ETFs only pay a cash dividend. Okay. And that was a real problem for me. It really was. It's kind of a pain to have to go in there quarterly and take that cash and then be stuck to have to roll it into partial shares. All right. I don't invest with M1. I know Brent invests in M1, and I know it's a lot easier to buy partial shares in M1, but in Merrill Edge, It's not that easy, okay? But just here recently, what I found out with the ETFs is when they pay that dividend, you can set those up for dividend reinvestment, and those shares will actually roll back into the ETF. So the answer to your question, to be dividend reinvested and participate in the compounding effect, that's exactly what you're doing, right? So when you're paid that first set of dividends, okay, that those shares will accumulate on each other, and the appreciation that you'll get will be on more shares. Then when you're paid that dividend the second time and the third time and the 8th time and the 15th time, your money is going to continually grow off of that larger amount. Weeks ago, man, I just made this discovery. Okay. So it's an awesome question. Thank you. Yeah, I agree with Brent. Investors coming through with a tag there talking about Apple falling back into the 160s. Apple just picked up a huge tailwind, guys, in the name of Warren Buffett. When you've got Warren Buffett as that big of an advocate, it doesn't matter how many analysts come out and downgrade your stock. I actually see the stock going to 200. I actually see it. The price targets of the really good analysts that I look at, back to Nyela's question, have it going to 220. I think it makes 220 easy. It's going to surpass this $1 trillion market cap, no doubt in my mind. If it goes to 160, I'm going to buy it back. I don't think that's going to happen. I think we're going to ride these existing shares up over 200. That's just what I think. Hitting 200 soon. New lows in the 170s now due to Warren Buffett getting into it. Yep, exactly. I got, let's see, got a few more questions to get here, guys. I'm working down the list here, okay? So I'm doing the very best I can. Yep, nice. I want to look into that VFMO, okay? I'm going to look into that at a later time. So 30,000 shares of Canada Jet. Jesus, Doug, we should talk offline and start a business together. That's another cool thing about this YouTube community is I'm meeting a lot of like-minded people that actually are very, very business savvy. I'm one of them. This is not my strong suit. Social media is not my strong suit. As a matter of fact, if I knew social media like the back of my hand, I might actually have 100,000 subscribers to my channel. But I think I'm screwing something up, but I'm gaining some great relationships with people. I think I probably have the most loyal subscriber base on YouTube. I love every one of my subscribers, man. I think you guys are great. So, okay, Brent's got that question for me. Thank you. I appreciate that. 0.13, that's a pretty low expense ratio on that VFMO, man. That might be very tempting. Really, you know, your investing portfolio has to kind of reflect what it is you are. I'd like to know how long it's been out. I'm going to do some more research on that, and I'm going to drop my answer in the Facebook group for you guys, all right? I'm done finishing in the Caribbean where tropical storms can pop up on you without warning. And that's awesome, man. Uncle Marv, man, that's awesome. Another commercial fisherman shout out right there. I work with a lot of tugboat guys up here, and a lot of these guys do scallops up here on the Northeast. It's kind of cool, man. We're kind of cut from the same cloth. You know, that maritime community, man, we're tight. So it's good to have you on here, man. No doubt. Shout out to you. So financial investors, man, getting some kudos tonight. Thank you for all the help, Brent. I really appreciate it, man. You're a very sharp dude. First time I saw your videos, man, I endorsed your channel, and you've been on the Independent Investor channel ever since, and that's where you'll stay. So I think we might be benefiting from a little bit of trickle down effect from Ryan Scribner's channel, no doubt about it. I'm going to owe that guy a big, big thank you someday, maybe more. I don't know, but like I said, I'd do anything for that guy. He knows I'm all heart, no doubt about it. I'm very sincere with my message, and quite frankly, that's actually why I think he helps me. He knows my heart's in the right place. 40 is really young. No. No need for bonds yet. Maybe when you retire. Yeah, that's kind of my thought too. And it just really doesn't resonate with me being a bond investor right now. It's just not something I want to do. I understand the importance of stock investing, and bonds aren't always safer than stocks anyway. Yeah, I mean, I don't know. On the risk scale, it's below, but I don't think blue chip investing is risky at all. You just got to have a tolerance to the swings, because I don't care what blue chip you are, you're not going to be subject to an eventual downturn. Either that or you're drugged down by the broader market. So I don't care who you are. I mean, we just went through it with Apple. So. Oh, no doubt about it. JD.com is a really good one. No doubt. A lot of people don't know about them yet. Oh, I know. That's exactly correct. Love buying and trading. You're good at it. No doubt about it, man. Invest yourself up to 7 figures, man. I'm all about it. That's great. That is great. I love the entrepreneurial spirit, man. And if you can put that stuff to work and make money for yourself, I'm all about it. Maybe he'll never need bonds because he'll get a pension and health benefits, assuming he stays in the military for at least 20 years. So it isn't just age thing. Yeah, you bring up a great point, and that's part of the reason why some of these questions, when I get hit with them, I don't have a holistic view. So about where somebody's coming from, what additional pension they may have, what retirement they may have, So that's a very, very good point. And that's a lot of the reason why I invest the way that I do, because I can actually afford to take on a little bit more risk, I feel, because I'm guaranteed that pension at 20 years. And I guarantee I will get my pension. I guarantee. The funny thing that you say that after 20 years, is 20% of the people who enter into military service make it to 20 years. Only 20%. That's a fact. And I think the majority of other services really speak to that. Folks are doing, 1 tour in the Army, 1 tour in the Marines, 4 years, and they're done, man. Those cats, man, I tip my hat. I'd give them a hug. I love those guys, man. I love them. I would do anything for them. Because those guys, man, those guys are going overseas. I'm not going overseas. I stay domestic in my job. I oversee the commerce that flows in the United States. That's basically about as insightful as I'll get on the job that I do. But you're exactly right. But I think, every investor should kind of curtail their investment portfolio to reflect what goals they have in the future, and to acknowledge where they could potentially be in the future, and not take on too much risk. I would rather see somebody safe in their approach than overexpose themselves to risk and not make their financial goals in the future. And I do a lot of that for you guys by providing you guys the explanation about the self-directed account. Because if you guys are young enough and you guys are hearing this message, by investing in the self-directed account, you've won half the battle right there without even investing in one single stock. The type of account makes that much difference. It really does. All right. Thank you, God. We all have cell phones to buy on trade at work. Hey, man, don't let that secret out, Doug. All right. Why don't we keep that between ourselves? All right. It's nice talking to you. Yeah, Brent's sharp. So I got Tim on the line. This is the first time I've seen Tim on here. Hey, Ryan, it's Tim. Next week, I'll have my remaining $2,300 to fully fund my Roth. Should I wait to buy VOO since it jumped up this week, or wait till it drops down a few dollars? Oh, that's a tough question, man. This market has been kind of on a mini tear here recently. I'd hate to see you invest now and take a leg down. But I also don't want to see you miss up on the latter half of this year. I think is actually going to be quite good. Furthermore, investing in an ETF like that, you don't really have to worry too much about timing the market per se. And you know my position on that, but I understand where you're coming from with that question. And there's never, ever anything against entering into the stock market carefully. All right. So with that said, what is keeping you from just taking and entering into the stock market in 5 shares of VOO? That's going to run you about half of your 2,300. get the other funds in there, that's fine. And see if you can't strategic buy that remaining block of VOO in an eventual downturn. Now, I just mentioned that as an option. That is an option. You could be very, very right entering into VOO all at once, okay? Because in the long term, is it really going to matter that much? I bought into VOO a couple months ago, and I'm still down a couple $100. I've been fighting back. I was down maybe $1,500 in VOO when this down, because I bought it the wrong time, which is the story of my life. I mean, it's fine. It's you get over it and you get used to it. You know, every time you buy a stock, it goes down. But you're basically buying it a little bit less than what I bought it for a couple months ago. So I think you'd be okay either way. If you had some hesitation in putting that entire 2,300 to work, you could definitely deploy my plan of buying 5 strong shares of VOO. And I understand they run at 250 a clip, but you're buying the entire index with each of those shares that you buy. That's an option for you. But with an amount of $2,300, a good rule of thumb that I talk to beginning investors on is if you have, less than $10,000, I really want to see you guys fully invested in the stock market, because if you're investing long term, it really doesn't do you a whole lot of good to keep that remaining $2,000 out, because what if the market continues to go up, and for $2,300, you might as well just pick up your entire 8-share position in VOO. You might be able to squeeze out 9 if I'm doing my quick math correctly, but it's looking like you can pick up a full 8 shares of VOO. And make no mistake about it, that's a nice position. That is a nice starting position in VOO, man. You can start that dividend reinvestment. And what's going to happen, Tim, when those shares adjust down? You're still going to be dividend reinvesting those shares at a lower price. So just something to kind of think about, both good options, man. Talking about investing that much capital into the stock market is a positive thing. It's not a negative thing. And I would endorse both moves. After all that explanation, if it were me, I would invest the whole thing. That's just me. And I think I would probably give that advice to anybody looking to deploy capital of less than $10,000 in the stock market. A little more careful toward the $10,000 mark, where we could potentially scale in half at $5,500 and then maybe look at scaling in the remainder of the $5,000 into the market. But I want you guys to get to your levels. And you're not going to get to your investing levels by being tentative. I want you to get to that $10,000 mark, and you will. You'll get there. Those investing levels, they will come and they will go. No doubt about it. I have full confidence in everybody in my group. No doubt about it, if they just follow the program. Awesome advice. Thanks. You're very welcome. You are very welcome, Nyla. What do you think about PayPal? Huge. That's probably my favorite payment company. I like Visa and I like PayPal. The problem I have with PayPal, and you guys can beat me up over this, is I don't understand what the difference is in the payment system in Venmo that I can get with Zelle through Bank of America. Can you guys tell me why it's so special, or why it's going to be so special 10 years down the line, and why their service is so exclusive? I understand they're out in front of the pack right now, but PayPal is a very, very good investment. I just would be careful at over allocating a huge position. If you want to take a 10-share position in PayPal at $800, great. You're going to make a lot of money with PayPal. There's no doubt in my mind. They are a solid company. I should have just kept PayPal when they broke off of eBay, because that's what they paid me. When I owned eBay stock quite so many years ago, they paid me PayPal shares. I should have kept it. Shoulda, woulda, coulda. L Brands is showing a 7.5. Nice. That's what's went up since the last time I checked it. That's a pretty healthy dividend, maybe too healthy. I don't know if that might be a kind of a red flag a little bit on L Brands. I tend to really, really scrutinize a 7.5% dividend in L Brands. That's usually a sign of not good things to come. That's not very a sustainable, healthy dividend if they're making good money. and they're not dealing with a lot of debt. So I would kind of worry about that. That's Avon. Avon's a really good company too. Definitely. You can make money with Avon. Absolutely. You bet. So Brent has a portfolio snapshot here. My whole portfolio was Apple for the most part. Wrote it up from 162 to 181, I think, and sold much of those shares for right now, still holding some Apple and VOO. That's all you need. Keep it simple, guys. I have one of my videos. It's called Keep It Simple, Stupid. And I mean it. I don't mean it to be condescending, but it is so true. Ulta, that's the one. Julio wins. Ulta is exactly the stock that I was thinking of, but it's just run up into the stratosphere, man. So thank you, Julio. Ulta is one of those that I would consider buying, no doubt about it. But it's one of those stocks, you know, you guys have to understand the way I talk and the amount of capital that I'm managing right now myself gives me the luxury of taking profits on an Apple or a Facebook and taking those capital profits or those already existing dollars and roll them into an existing position or a new position in stock without having to take my existing money and devote new dollars to the stock market. Now, you guys know that I max fund my Roths every January, and that's fine. But a lot of the benefit to having a good amount of capital built up is that you can do things like that. You can skim off a little bit of profit, keep some of those existing shares in there, and put some of those new positions to work. And you guys will be there. You guys will be there. But if you're just starting your discipline in the stock market, get as many dollars as you can in there and invested and working for you, because you're not going to end up with a portfolio that is like mine overnight. Okay. I've worked my whole life to build that, and I've made more mistakes than I've had successes building my portfolio. So if I can get you guys started correctly, make no mistake about it, you're going to accumulate that wealth over time, but it's not going to happen for you overnight. To earn that level of portfolio, you have to log some days, months, years, and decades in the stock market to make sure that that portfolio is built. I look back over my portfolio evolution, and I don't remember going through, you know, all those stages of owning 2 or 3 stock. You know, I just focus on what I've got now, and I tend to focus on what I'm going to have in the future. So that's pretty cool. Only want it to go down when I don't own it. Laugh out loud. Yeah, I know. Don't wish ill will on anybody, but let me try to get to some of these questions here before we wrap up. I've been going over an hour now, but I'm at Ulta. The guys helped me out on that. I appreciate it. Hey, I'm about to say there's Brent in here. What do you think about Coke? It has dropped 20% this week. Has it dropped 20% this week, or was that Coke bottling? Coke bottling dropped big time. Coca-Cola, which is traded under the ticker symbol KO, I own 50 shares of it. I bought it in the low 40s, and I'm waiting for it to go up, and I'll sit on the fat dividend. I'm a big fan of Coke. I owned Coke in my account. I own Pepsi in my wife's account. 2 staples, 2 beverage companies that I think are very diversified in their product base. So Brent's talking here. Don't know many that buy Coke. I think most people I know invest in KO, which is Coca-Cola Company. So there it is. Brent hooked me up there. That's correct. I did see Coca-Cola bottling. And there's also Coca-Cola Europe, which is CCE, I believe, on the ticker symbol there. That was actually a new IPO just a couple years ago. What about AT&T and Verizon? I own both of those companies. I scaled back on Verizon a little bit when it was in the 50s. I'm glad I did, because it adjusted back, and it was one of those stocks that I actually almost bought today, but it went up 4% today, and I'm not going to buy it on a day like that. But I actually own 100 shares of AT&T. And if the Time Warner deal goes through for AT&T, that means money for the independent investor channel. Me. 100 shares? Yeah, I'll see it back over 40 again. And I'll continue to collect this dividend. I like the DirecTV acquisition. I'm actually an AT&T customer. I love that acquisition. If they take on the Time Warner assets, which I think they're going to win, we are waiting a pending decision on this, guys. And I think they're going to rule in AT&T's favor. You can laugh at me if they come out and they say, no, it's declined. The deal is broken up. But I actually think they're going to rule in their favor. Okay. But 100 shares of AT&T is what I've got. Last week felt like a good time to add to my portfolio. You bet. Added more ITOT to get my cost basis down and some Berkshire Hathaway B shares as well, all to my self-directed Roth. Any thoughts on Berkshire Hathaway? It's one of my favorites. Gosh, honestly, I was actually considering taking a position last week as well in Berkshire Hathaway. I held off. There's a couple of asset managers I like. I do hold the Blackstone Group, which is actually very good. It's no Berkshire Hathaway. Berkshire Hathaway is a holding company. Blackstone Group is an asset manager, so a little bit different idea behind owning shares of Berkshire Hathaway. It's one of my favorite companies. You guys, I should probably add that to my cornerstone of investing. I do have it in the Facebook group as one of those stocks that you can add as a safe conservative investment to any portfolio. But honestly, I don't know what the dividend is in Berkshire. I think it's very low in Berkshire B. Do you guys know what that is? But I'm all about it. And I think Berkshire B is going to pay you back over time. No doubt. I'm a bull. And I'd like to gain some exposure on Berkshire B. I may have to do some consolidation because to own Berkshire Hathaway, I would like to own at least 50 shares of it. But if you're buying 1 or 2 shares here and there, and you're trying to accumulate those shares, I think 10 shares of Berkshire Hathaway at $2,000 is a steal. I really do. I think that's an excellent, excellent way of building your self-directed. So great question, Avi. Thank you. I'd like to know what you think about the ETF DIA. Yeah, so I've owned the Dow Jones Industrial ETF. I've owned it before. I would almost rather just buy the individual stocks that make up the Dow Jones Industrial Average, and I own a lot of them. You guys know, if you looked at my portfolio makeup, hell, I probably own half of the Dow Jones Industrial as it is. So owning the ETF that's only spread across 30 companies really doesn't make a whole lot of sense for me. And buying DIA right now with the market at an all-time high, I mean, God, I don't know why, but I actually think we're due for some level of correction. That's just my personal feeling. I'll probably be wrong, okay? If we're in for some level of correction, the DIA is going to suffer, right? And then you're going to be kind of wondering, gosh, do I buy more? Because a DIA is an ETF that you can buy and hold forever. It's one of those ETFs that I would probably like to buy instead of a bond account someday, like when I'm, retired in my 60s, 70s. I could put a good $100,000 position in DIA and just sit on it forever, right? You could do that. But the S&P 500 is where I want to be now, and that's where I want my audience to be. Do you happen to know what the expense is to own the ETF DIA? I believe it's 0.14. You can correct me on that if you'd like, but it really doesn't diversify you as well as I'd like to see you diversified, as opposed to a weighted index like the VOO that exposes you to the S&P 500. That's a killer question. Thank you. That's Mystery Queen 86. Don't get me wrong. It's a very safe way to invest in the Dow Jones Industrial 30. It's a safe way of investing in all of them at the same time. And it's a very, very good offering. I think Schwab owns DIA, I believe, if I'm not mistaken. But it's a great way to enter into an ETF that's safe and passive in some of our legacy blue chip companies in this country. No doubt about it. So Thank you for another Friday. Just got off work. Sarah, you're welcome. Nice to see you. So nice to see you. I actually have the day off today. I work enough. So you have an amazing channel here. Hey, Doug, thank you so much, man. There's a lot of intangibles that I take out of this channel. I love conversing with people. I love talking with like-minded people who are interested in the stock market. And I like talking to people who would have never, ever been interested in the stock market unless they came across my channel. That is really the root of what keeps me going, is if I can say something that resonates with somebody. And somebody said, Ryan, I like your channel because you talk very simply. Yeah, because I talk to people. I don't talk at them. And I get the feeling that a lot of channels talk at people like somehow you have something special to offer. No, you don't. No, you don't. You're not smarter than anybody else. You're not. Get over yourself. All right. And I honestly feel that way. I really feel that way. I honestly feel that a lot of my empowered students who take my information and run with it will probably be 10 times more successful than I've been in the stock market, right? And I would love nothing more than for them to just get started a little bit earlier on in their life to kind of start that accelerated compounding effect. But I really appreciate comments like that. I really do. I don't get a lot of negative feedback anymore. And I like that. Negative feedback, I don't like it. It's hard for me to ignore, because when you do something like this on your own time, you know, it makes it kind of hard to get the feeling that some people don't appreciate it. And it's the people that do appreciate it that really kind of keep me going. It really does. And I don't think there's anything wrong with having a little bit of spiritual health with regard to a financial discussion. I think we need to have more financial dialogue amongst our working class people. I don't think we need to shy away from the topic. I don't think it's a topic that only the rich need to enjoy. I don't. And I'm looking to blow the doors off all those stereotypes. I really am. And I hope one investor at a time we're succeeding in that mission, no doubt. Yeah, man, I got another military guy in here. You guys see that? Jake's in here. I hope he doesn't mind me calling him out there, man, but no doubt that guy right there, man, I love that guy. No doubt. That man's serving his country. I'm serving the country as well, but I just do it in a different form and fashion than that gentleman right there, no doubt. And I'd salute him, no doubt about it. Yep. So Avi, best ETF I currently own is FTEC for anyone using Fidelity. Awesome. To invest in self-directed IRA, FTEC provides a great tech exposure with 0.8% expense and free trade. Yeah, I've heard that about Fidelity. That's really awesome. I love testimonials like that, Avi. Thank you so much. I use those, and Fidelity is always in my top tier brokers that I recommend. Fidelity, TD, Charles Schwab, and Merrill Edge, and Vanguard usually is up there close, but it's not in the top four, no doubt. Fidelity is. I'm partial to Merrill Edge. I really like them. I know Brent uses M1 Finance, and certainly if you guys wanted more information on M1, because he said enough to me to tempt my curiosity. And I may be using M1 actually here strategically for a little project that I got coming up, because I really like the prospect of them allowing you to buy partial shares. I really like that. So you guys can definitely pulse in with Brent on the financial investor. He's got more information on M1. But certainly I really like those testimonials on the good brokers. I know there's a lot of people out there that are looking to start their brokerage account and they don't know where to go. And if they could kind of whittle it down to 4 or 5 options, that would make the research a lot easier. I think we talked before on Ryan's Facebook post. No doubt. We've been talking a long time, man. No doubt. I think the second week of June will have interest rate tick up and should cause a nice dip. I agree. I think it's going to be something like that. The market has really kind of been on an untouchable tear. I'm interested to see how some of this geopolitical risk shakes out. I'm actually more interested in the geopolitical than interest rates ticking up. We know interest rates are ticking up. They are on an uptrend. Okay, that's just the way it's going to go. But I'm more interested in some of the specific geopolitical risk with North Korea, Syria, and Iraq right now, with regard to us kind of hitting throwing a curveball at this market, something not anticipated, putting kind of a jarring nerve into the stock market. That's my concern. I like to know, what do you think about DIA? So I got DIA on there. Have a good night. Thank you, Doug. Appreciate. Take it easy. Have a good weekend. Have a happy Mother's Day. What's in your opinion will be the new Amazon? JD.com, no doubt. They're already doing it. Or Alibaba. Those two stocks are very impressive. I could own all of them. I own Amazon right now, and 5 shares of Amazon is not cheap. Okay. Warm applause with the like button. Yeah, I don't know. You guys know all this YouTube etiquette, man. But I appreciate the confidence, man. Thank you. We're going to probably sign off here pretty quick, guys. We're going about the time that I usually go, about an hour and 20 minutes. Again, just a swath of awesome questions. I'm going to finish up this last group here. So Avi came back and confirmed for me no dividend with Berkshire B. That's what I thought, and that probably is what kept me from buying the holding company. Thank you so much for your time, Ryan. Awesome live chat. Time well spent. I'm glad you feel that way. It's time well spent for me, man. The best way to learn information is to teach it. And I have learned so much in the last year just teaching this information, guys. And I just want to pass that back to you so it's reciprocated and we can all kind of learn together. That's the idea. DIA has a 0.15. That's what I thought. Thank you for that. You got 0.17 on one of the expenses, so relatively close there. It's one of the spider ETFs. Yep. Consumer staples, VDC now, or wait for a dip and buy the S&P 500 index, and or tech during a dip. Love the channel. Thank you so much, Bob Goldcat. I tend to like a little bit more the broader stock indexes if you're going for indexes. If you're going to buy consumer staples, why don't you just go in and just buy Procter & Gamble outright? Why don't you buy some of these beat up staples right now? Because you're getting them at a discount. And I don't necessarily think you need to buy the ETF to acknowledge that you're in kind of a cyclical or a sector rotation or downturn. So I don't think you need to be buying into it as a whole, but I certainly think you should probably look to pick up some of these quality names that I talk about. Kraft Heinz Food is one of those that you could probably pick up here on a severe discount. I mean, I'm down to close to 25%. I made $10 a share back this week. I was happy to see that. But certainly look at buying some of those companies. General Mills is another discounted stock. I really like Newell Brands at $27. I mean, look at where that stock has come from. That's come from the mid 50s down to the mid 20s right now. I'd be a buyer of Newell Brands. I would be a buyer of Pepsi, no doubt about it. Procter & Gamble is my biggest one, though, from the staple sector. I think I'd probably be a little bit more of a stock picker out of staples and a little bit more of a stock picker out of tech specifically right now. All right. So I'm going to scan through and make sure I didn't miss any of these. I've got MJ Martinez on here. Really like your videos, man. I appreciate all the hard work and dedication that you put into your videos. Top of the line content. Yeah. Hey, thank you very much. What can I say? I thank you very much. I'm not perfect. I'm just putting out that information to the best of my knowledge and try to understand that if I was sitting on the other side of the camera, what would help me understand what it is the hell that I need to know? Because the thing that pisses me off the most in investing is all the crap that's out there. There's so many people that think they know it all. And most of those people you want to turn away from and walk away, because they'll do nothing but mislead you, nothing. And it's not going to help you out at all. I make sure that there's no connection at all between me and my subscriber base other than very good information. That's it. That you can take it, you can run with it, you can deploy it, you can have it. It's free of charge. It's yours. You can have it. And quite frankly, I wouldn't be able to do this channel if I didn't know in my heart that it was the very best information that I was providing to people. No doubt. Thank you for that. I appreciate it. Thank you for your time. God bless. Same to you. Happy Mother's Day to all of you guys. I'm glad you enjoyed the live stream. I'm kind of at the end of it. Great discussion, guys. Thank you so much for tuning in. Tune in next Friday. We'll be hitting it again. I look forward to the 9 o'clock feeds, guys. Have a great weekend this weekend. Tell your moms out there that you love them, all right? Because that really is the essence of this channel. I know we talk a lot about money and finances, but there's so much more to life than it easy. And have a great weekend. Happy Mother's Day. Good luck. Thanks, guys.